Hey, Sarah. Oh, hey, Sarah. Can you hear me?
Connected here. Great afternoon. How are you?
Okay. I don't like what Zoom has done. You have no choice now. You have to have them either enter a passcode or
Or
you have to
let them in.
individually. Yeah, I don't
Isn't
like
that
that.
a nuisance?
It is, but I can kind of see that. We actually had a 1 million cups meeting 2 weeks ago, I think, and someone Zoom bombed it and started showing like pornography and stuff. So I guess
Are you kidding me?
yeah, and it's interesting because the presenter was actually she said I think she said it was being live streamed to her church. Okay, so but
Heard of such. How can
well,
someone Zoom bomb?
I,
I'm not that tech savvy. This has been a pivot for me.
nah, well, yeah,
But
and to
oh
be,
my God.
I personally don't care if someone Zoom bombs our meetings with porn. I just roll with it and have some fun with it.
Bob,
But
let's switch topics here. You are a mighty much. Well, I don't want that to get back to Jeff Bell if I'm on there and somebody
yeah.
come in with that. No, I have no. I've come too far. It's
Oh,
like no, but
it,
yeah, that's terrible.
it's just a hassle to have to admit people individually. It
I
really
know
is.
that is in, interesting. So if you find a workaround, let me know, please. I'm gonna do the
Well,
passcode, but I haven't had time to even create one on my personal Zoom link.
I, I I would love to get a workaround for that. Maybe if we have the option just to shut that off. I don't care who comes in our meetings. I really don't. You know.
Same with me. Same with
So
me. So we must conform.
yes, yes. What I'm going to do is I'm probably going to make you a co-host, and I'm going to keep an eye on admitting people in as they come in. That's
Okay.
I don't know what else to do.
Right.
Hey Rick, hey Kathy.
Especially with you having such a large crowd,
Well,
and people coming on different times due to scheduling and all that.
yeah.
It's all good. We'll get around it. So whatever you do, I have my PowerPoint ready and all of that. So
Okay. Can you see my screen okay for now, Sarah? Before I
nope,
transfer it over to you.
nope. I see no screen. I just see uh, what the four of us gallery.
Oh, really? You don't see my screen?
No, I
Okay, let
don't.
me.
Maybe someone else might. I
Okay,
don't
let me
see
see
it.
if I can fix that.
Okay.
That's interesting.
I'm glad you asked.
Yeah. Okay. How about
I
that?
think it's there. It is. Mm-hmm.
Okay. Good. Good. Excellent.
Yep.
Excellent.
Mm-hmm.
Okay. Okay. It looks like you know. How'd your week go, Sarah? Is it going okay?
It's been amazing. What is, gosh, how you're right. What is today? We had a convention, so I'm just somewhat. Wow, what day is it? It off to a great start, fast.
Uh huh. Uh-huh.
Yeah, we had our leadership convention this past weekend, so that was.
Yeah, I was able to sit in on some of that. That was actually pretty good.
Oh, I'm so glad you were able to. Awesome. Well, I was glued to that and some
Yeah.
of the pre-event. So
Yeah. Thank you for letting us know.
yeah,
That's
I
actually
saw
pretty good.
that. I have to share.
Yeah. Oh yeah.
Did you get to see Don Yeager?
Yeah.
Yeah.
Yeah. I'm sure it's not the same as if it was live, but he was
Right,
good.
right. Yeah.
I saw someone give one takeaway I really liked about that. Uh, Time either promotes you or
Mm,
exposes you, and I thought,
mm,
that's really true. That's really true.
yeah, you're so right. When you think about it.
Oh yeah. Okay. Well, Sarah, what I'm going to do is I'm going to show the whole screen and see if I can still. Now let me shut that off. Okay. Okay. Oh yeah. Okay. I can still see people coming in. So
Okay. Well, great.
let me just shut off the sound on my phone. And okay. Well, um, if it's okay, Sarah, let's go ahead and get the ball rolling here. Hopefully people will join, okay, as they come
Oh,
in.
it's okay. Yeah,
Okay.
this is
So
the free part.
yeah, well, yeah, absolutely. And well, if so, actually, I had something come up last week that I would like to also show why I use Legal
Please.
Shield.
I,
Uh,
this is just an intro, so I would love for you to kick it off. Hey, I'll be good 15 minutes
okay, okay.
because it's just an intro. Yes.
Well, it's an important intro.
Well, thank you.
Okay, well, first of all, I'd mentioned this before that COVID-19 has been spreading, all sorts of ideas for lawsuits. People are starting to scream and call the king, that sort of thing. Where they're starting to say like, oh yeah, my employer, I had to go to work because of my employer. My employer got me sick. You know how people are. I should say how people who have the mindset of they deserve something. So people are suing now apparently for getting sick at the workplace supposedly, and also for oops. I'm sorry, Sarah. See, this is what's so annoying is people need. Sarah, can you still see my
No.
full screen?
Yes, yes.
Okay, because I'm just popping up the user thing where I see everybody popping in, so it's more easy for me to do that. Okay. Oh, okay. There's an admit. Okay, there's an admit all thing.
Oh, thanks for sharing. I'll look for
Okay.
that one on mine next time.
I need to play around this thing and see if I can avoid that. Anyway, as I mentioned before, okay, because of COVID-19, there's all sorts of new lawsuits stemming up, and as a tenant, as a landlord, I don't want a tenant to come up and sue me and say, hey, look, because you didn't properly protect me in my residence from COVID-19, I got it. So anyway, so that's one thing. It's good to know that you have someone like Legal Shield involved. Okay, now that's a defense mechanism, a shield, if you will. Okay, that's what's called Legal Shield. Duh. Okay. Another thing is this popped up in one of actually our main Facebook group, the Money Mastermind group on Facebook, and someone's asking. Apparently, this mobile home straddles two pieces of land owned by two separate people. Does one person have the right to get rid of the mobile home off their land, basically evicted? Okay, I don't know. This is not my issue. Otherwise, I'd just bring it to Legal Shield. Okay. Now the next one is something I brought to Legal Shield. In fact, just today, I have a judgment against somebody, and in South Carolina, a judgment automatically attaches to everything they own. You got to record the judgment. That's really important. Okay, but it attaches to everything they own, including their real estate. Okay, so anyway, what I did was my judgment. The debtors, the people who owe me money, and as well as other people too, they declared bankruptcy, and they were granted a 5-year plan in Chapter 13 to repay everybody, including me. Okay, one of the issues was my judgment expired. It's a 10-year expiration date. My judgment expired maybe about a year and a half into this 5-year plan. So my first question to the Legal Shield attorneys was, can they stop paying? Oops, admit all. Can they stop paying? Okay, after after a year and a half, or do they still have to fully pay me over the full 5 years because I'm in the plan? It turns out the answer is it's a court order, so they have to pay me everything as long as it's a court order. Now here's the issue. Just last week, I got a letter that they messed up, so the bankruptcy court dismissed this case, which means they no longer have bankruptcy protection. So my question to Legal Shield is, how does this affect the money they owe me? They still owe me some money, about $5,000, about $4,000 or $5,000. So how does their case being dismissed because they missed a payment, how does that affect my payments? See, I don't know. And if I still can collect on it, I'm going to ask Legal Shield, how do I go about collecting it? Because I want every penny they owe me. So
Absolutely.
Anyway, so that's,
wow.
I'm glad I have Legal Shield for that. Otherwise, I go to some other attorney, I'm going to get charged out the yin yang. Okay. So anyway, I'd like to introduce, speaking of Legal Shield, I'd like to introduce our speaker on that, Sarah Mitchell. Sarah is a legal, you know what? You're the regional director now, aren't you?
Yes, don't worry. Yes, don't worry about all that.
I'm sorry. Okay,
I'm just
sorry,
one
folks.
sharing information.
Well,
Don't even worry about that. No,
now that
it's
cannabis
about
is
the
legal,
information. It's about the information.
okay, now that cannabis is legal, I got to stop smoking it before the meetings. I'm just joking around. I am joking around. Okay, anyway, Sarah is our local, I should say, regional director for Legal Shield here. Sarah was formerly trained in business administration and accounting. She's a former manager at Bell South. She has plenty of business experience. You signed on with Legal Shield, I believe, in 1998. And now this is what you
Yeah,
do full time, right?
it's all I do
And
for the
anyway,
last
Sarah,
20 years.
oh,
Plus years.
okay. Yeah, this is great. And Sarah regularly trains using Legal Shield attorneys for protection, or in my case, as a weapon. Okay, remember I said I use Legal Shield as a weapon. I try to, in fact, there's a situation I'm partnering with Trisha, Julie, and Lisa that I'm going to try to invalidate the mortgage using the legal, the legal allowances, if you will. And I have a question to Legal Shield about that too. Okay. Also, now Sarah specializes in the small business and employee benefits area to help small businesses affordably protect and grow their businesses. Okay. And I think Legal Shield, now, to be fair, I will have to put a little caveat. Legal Shield is not for everybody. However, I think for the vast majority of people who really want the legal protection, it's a very affordable way to get good attorneys on your side. Okay. And Sarah, if it's okay, let me figure out how to. Okay, let me figure out how to. Oops. Okay.
Okay.
I'm going to put you as a co-host here.
Okay.
Let me see here. Okay. And if you can, see if you can share your screen.
I'll try right now.
Okay.
I believe, do you see my screen at this
No.
point? You don't?
No. Not yet.
Okay.
I think what you have to do is you have to move the cursor over the screen and you'll see where it says share screen.
Let me just minimize again. Okay, I went to screen share.
Okay.
This will stop. Okay, it's populated again there. I think we're good this time. Is that better?
Okay, I got you. Yeah, I got your screen now. This
Okay.
is great.
Okay, super, super. All right, well, being respectful of the time here, about like you looking at the computer, looking at the phone. Okay, well, I'll go ahead and get started. Again, everyone, thank you so much for being in attendance on this preview part. And I could not thank Bob enough for him allowing me to just participate. And of course, Midlands REIA, they've partnered with Legal Shield, and that's what's so exciting. Our company allow individuals as well as entities and organizations to partner and help get the word out. We're a word of mouth company. The company is almost 50 years old, and I'll go through, all of that. More about the company a little later. So first, we thank Bob, and as much as Bob utilized the service, we both should be charged for 2 memberships, but we continue to pay for just the one. You can't have but one, but when it comes down to utilization, we use the membership. Can you hear me okay, Bob? Or someone thumbs up?
I sure can.
Okay, great. Well, as it relates to tonight, I'm going to highlight our services. The beauty is, Bob, because Midlands REIA is one of our alliances, there is a website, there is a link on Midlands REIA website, so you can get additional information and or call me, because I am that liaison working very closely with Bob to share more information. So as I go through this tonight, I'm just going to highlight a few PowerPoints, and it won't be where we have a Q&A and all that, but just know my number is at the end, and I'm open to taking calls. This is all I do from my home office here, Northeast Columbia. So let me just start with all of you on the line are in some business capacity, one way or another. Many of you may be like myself. I work from home, home office. Some may have a storefront, but either way, we have found that Legal Shield can bring so much value to individuals, especially a lot of Midlands REIA individuals, because no longer do you have to check your bank account before you check your rights. And not that it's can't afford it. But it's like, why pay $300 or $400 an hour when you can do, as Bob has indicated, just pick up the phone. And we found that small business, I love my small business owners, how I'm in a position to help them because we have the same issues as big businesses. Oftentimes we don't have the deep pockets to afford or care to have attorneys on retainer, if you know what I mean, paying multiple digits, monthly. And we found that nearly 60% of small business owners said they experienced a legal issue. That number, this is an old slide because since COVID, it's higher than that now. And many of them did not hire an attorney because affordability. As a business owner yourself, or you may have a colleague or a client, we work with CPAs, financial planners, investors. I mean, it's the whole gamut. Tax preparers, and a lot of them have in that B2B space where they're looking at how can I help my client. I was helping them with credit repair. Now they're talking about this other issue. So these are individuals too who look at, oh, I can share this, and now that person can have affordable access in another area. So think of yourself and others or family members as I go through this. Have you ever fired an employee or had, debt collection issues? You may not have employees, but you know of someone who may have been in a situation that wasn't that comfortable. Debt collection, that can be applicable to all of us. Bob just alluded to that earlier. And so again, have you been in a situation where just having access to an attorney to review a contract or a dispute of some sort with having that access without having to worry about billable hours, could that possibly have helped your given situation? For most of us, the answer is yes. And we've made it so convenient. All you do now is just tap the app. I mean, literally, you don't even have to worry about the law firm number or anything. As a matter of fact, we have a presentation tomorrow night with Merritt Webb, the attorneys, for all of the associates that are involved with Legal Shield. So before, when Bob and I have done many of these lunch and learns and breakfast meetings and Zooms and all before COVID, some of the top 10 issues faced by business owners were debt collection, contract review, document review, things of that nature, tax audits. Those were some of the top 10. But guess what has happened? Since COVID, there's a whole nother set of circumstances around some of those same issues. And even if it's debt collection, you're looking at, should I send a debt collection letter? Should I report a debt to a credit repository? There are a lot of companies now are reopening. Well, yes, they're happy, they're excited, they're ecstatic. However, that is possibly bringing about a whole nother set of issues. Where do you go for all these answers? By the way, Bob, on Bob's website, he can also provide to you, and I'm happy to facilitate as well, getting to you a COVID resource library that we have, which is real-time update by the law firm. So that's good for you and or your business. And so going back to, COVID and non-COVID contract review, can I be responsible for a breach of contract? What if you entered into a contract and because of COVID, things change for you? Now can you be liable still? So these are things that so many of our business owners are taking to the law firm without having to worry about billable hours. Some of them just need clarity on all the new legislation around government relief efforts. The question is, can I file an insurance claim due to losses related to COVID restrictions and closures? We don't have all those answers. We're not the expert, but what if you can tap the app on your phone, get those answers? I just had a young lady to call me today and said, there's some more money available. She didn't have all the details, didn't understand all of it, but asked me, what did I know about it? It's like, well, I really don't know about that one. But it's like, well, what if someone received paperwork and now they're applying and they should not be applying for that based on restrictions and things of that nature? So, there's the EIDL, the SAB, express loans, debt collection relief, the PPP, all of that. We're having members to pick up the phone and go to the attorney for those answers. And that is so huge. So here again, when it comes down to what we're doing, Bob, I don't know here as far as what my control status is.
Sure.
But looking at, bless you,
Oh,
looking at
thank
what
you
are we
so
doing? Yeah, absolutely. We're helping individuals to have affordable access. That's all we're doing here, so that you can tap an app and not have to worry about how much it's going to cost you. Our corporate office, Ada, Oklahoma, we've been around almost 50 years, and our vision is just the one vision, and I think it's so powerful. I've had the service since 1998. I could tell you enough stories to wallpaper your office as well as my office here as it relates to utilization. You know, basically our vision is to provide equal access to the liberty, equality, opportunity, and justice that every human deserves. And you as a business owner, you as an entrepreneur, you as a family person, you as a mom, you as a dad, we're always taking care of people. So who is taking care of us when we need help as it relates to many of those? So what I'm going to do is highlight some of our business. You can take a screenshot, picture, or don't worry, Bob can provide you this as well as myself. But we have 3 tiers for our business owners. The vast majority of you, if you don't have employees, you may not even, depending on your situation, you may not have interest in either of these tiers. But the tiers range from $39 to $149 a month. Even if you had to pay $149 a month and you knew you had unlimited access to your law firm right here in Columbia, South Carolina, where you could have contracts reviewed, documents reviewed, telephone consultation, debt collection letters written on your behalf, trial defense in place. Gosh, even 149, the average attorney would tell you, I don't think you could come to me for that amount of money. We're not saying sever the relationships that you have. We're just helping you to see how we can complement what you might have as it relates to relationships, and keeping in mind, I have a few attorney friends myself as well as you. However, they don't practice in all areas of the law. Susan Ogier, she's a corporate attorney in Wisconsin, my best friend, but she would not have been able to help me with that speeding ticket that I got at Myrtle Beach there, you know, there when I was at the beach. So that's what you're looking at. So let me highlight what's really working extremely well for many of the Midlands REIA family. And this is a home business supplement. Imagine for $9.95, you can't even go to Starbucks twice for $9.95 or Panera Bread once for $9.95. You can add that to your $24.95 family plan, and now you have business coverage. What does that mean to you? As it relates to your investments, your contracts, your negotiations, anything related to business, as Bob has alluded earlier, you pick up the phone and you now have business coverage. In addition to that, as you can see on the screen, not only do you have the unlimited business consultations, but they review contracts for you on a day, you know, up to 15 pages. They help with debt collection letters. I mean, one of my members, she just had a debt collection demand letter sent on her behalf, and magically her $300 payment that was owed to her appeared in the attorney's office, and they sent that to the member. How much did she pay for that? Nothing. It was part of her membership. So small, large, it doesn't matter, from the trivial to the traumatic. So they even cover with Schedule C audit. I mean, we all as entrepreneurs and business owners, if you audit, you're going to be looking at Schedule C and Schedule E there. What if you have a tax attorney to help? Huge. Okay, as shifting gears, moving on now. Family plan. I told you the family plan is $24.95. As it relates to that, I can't even go into all the stories, but there are a whole nother set of personal COVID related issues, as you can see on the screens, from refunds to college tuition, estate planning. We have now more and more members getting their wills done. People calling me almost every other day. I'm getting a call inquiring about how can I update my will? How can I get a will? My niece even called because her fiance grandmother bit by a wasp. she's in the hospital right now. They need all of those documents in place. So that's COVID or non-COVID. That's what you're looking at. So just imagine the convenience of having an app on your phone, tapping the app from the personal side, covering you, covering that spouse, covering all of your children up to the age of 26, living at home or away in college, never married, where there's personal advice, unlimited, letters written on your behalf. As Bob referenced, I've had letters written on my behalf, contract review, document review, personal IRS audit, civil suit, family domestic. We even cover uncontested divorce, name change, and adoption. Now, there is a 90-day waiting period for that, but so what? I mean, if you can have that done without having to pay billable hours, I think that's huge. All of that is tap, snap, send. All we are doing is shifting where it's disruptive innovation. What about your will? I just spoke with a member today. She told me that she did her will last night, sitting sitting right there in the comfort of her home. That's what Joy shared with me today. So again, you can have all your estate planning in place by way of your phone for that $24.95. I mean, you're entering into business transactions all the time. When was the last time you updated your will? You know, that's a good question. Your assets have changed. Is that reflected there? So here you have your estate planning, your living will, last will and testament, healthcare power of attorney, medical, financial, all of that. In addition to that, for that same $24.95, you have 24 hours emergency access. It doesn't matter what it is. Spoke with a member today. Gosh, she's somewhere very far, nieces or something like that. She was a referral. Anyway, spoke with Ms. Simmons, and she got a letter today, and she was just frantic because, again, there was an agreement. It's an easement issue on the personal side. Before this other person husband died, it was like, you have full rights to this road to go to your home. Well, she got a letter yesterday, well over the weekend, Saturday, and it's saying, no, you can't go, you can't use the road anymore to go to your home. That's a frantic situation, but things change. It wasn't in writing, but at least she has legal shield now to call. What if, tonight she has a knock on her door with law enforcement? She can tap the app and call and speak with her law firm. So those are just a few of the services, and we have more members discounts. We now have privacy management, and I don't know about you, but if you really understand what identity theft is about right now, you would all want to look at this particular piece very seriously. If you're single, it's $15.95. If you're family, it's $29.95. But not only do we cover medical theft, Social Security, DMV, criminal character, financial, and synthetic, but we cover you, in the whole scope, the scheme of things, because again, you are guilty until proven innocent when it comes to identity theft. So that's what the second app is, two separate products. As you can see there, it is not just covering monitoring. It's your 401k, your savings, all of your loans, subprime. What if someone investing in property along with you using your information and you don't know about it? Next thing you know, not a great situation. So that's what you're looking at, especially if they default or go in foreclosure. So here it's your Facebook, your LinkedIn, your Twitter, Instagram, all of that social media profile. So we are about reputation management as well, because when our reputation is tainted or impacted in a negative way, it can be a snowball effect. All of this come with $1 million guarantee. The other part that we're excited about, this was just announced last week. We now have another supplement, the ride share and delivery. How many people do you know that Uber, Lyft, DoorDash, all of those delivery individuals, what if they can have protection? Because when they're in that vehicle, should something happen, it's in a different classification because it's income producing at that given moment. So here we have where there is a supplement for as little as $12.95, where they can have letters and IRS audit help and traffic services, consultation as it relates to that particular industry or that particular business. Commercial drivers, some of you may know commercial drivers, have friends, or may do some commercial driving yourself. We have a plan for that. Some of you may be carriers. We have many carriers now. And of course, we have a gun owner supplement. I work with many law enforcement and investigators who offer that to their clients and members and colleagues and friends because of that vast protection there. So keeping it simple, the legal plan and the plan that's very popular with a lot of entrepreneurs. Together, it's only $34.90 a month. And then, of course, you can add the ID Shield there. But for $34.90 is the best write-off. Plus, on top of that, we get all the perks. I mean, I have saved so much in perks. I don't, because of time, I just can't go into all of the stories, but I have saved thousands of dollars in utilization of the perks, from cell phone discount there for individuals, travel, auto, you name it. I just sent some flowers, and that was a discount to my friend in California there by FTD by going in through my perks. As I stated earlier, Legal Shield has been around longer than 99% of you probably on the phone. And all we're doing is protecting families. Right now, 4.4 million lives. Our attorneys indicated that on an average, we get about 2 million requests for legal assistance annually. And the savings have been substantial. And I'm part of this number, Bob, part of this number, where they reported in the last 5 years, they've either recovered or saved our members $252 million. And all of that is documented. In closing, next steps, please reach out to Bob or reach out to me. My number, Sarah Mitchell, 803-622-5334. On Bob's website, Midlands website, there is a link. And of course, you can go there, look at the different plans, look at videos, listen to, learn, and allow me to answer your questions. We're happy to send you the COVID resource link as well. So again, hopefully this interview, this short presentation overview here has enlightened you, and we're just looking at how we can join forces in helping you to protect your business, your clients, and your family. So again, thank you so much for the sharing this afternoon. So Bob, having said that,
well, thank you, Sarah.
How do I defer it back to you?
Let me check here. Thank you, Sarah. I appreciate that.
No, I thank you.
While I'm switching back to my screen, I just something I noticed. I like to post these tips that I kind of half ingest on my Facebook page, and one of them was, if you need extra cash, break into a registered sex offender's home, because, well, for one thing, their addresses are easy to find, and they're not allowed to have guns. And I just realized ID Shield makes it real easy to find their addresses. Folks, I'm joking. That is a joke. Do not break into anyone's house. Okay, so can you see my screen now, Sarah?
I can see your screen, so I don't need to do anything.
Okay. Does anyone have any questions for Sarah, as long as we're on the pre-meeting part? If anyone does, please unmute yourself and speak up. And if not, I'm going to continue. Well, thank you, Sarah. I appreciate it.
No, thank you.
Okay, well, any in-depth questions of Legal Shield, please take to Sarah. She knows this thing inside and out. But anyway, let's get into the official meeting itself. And this is, of course, the Midlands REIA meeting, monthly meeting, every second Monday of the month. There are other REIAs, good REIAs in the area, so I urge you to seek them out and build your networks. Okay, liability disclosure. As far as I know on this call, unless there's some of you that I don't know about, there aren't any licensed attorneys, or except through the Legal Shield attorneys, of course, or financial advisors or anything like that. So theoretically, okay, we're not supposed to be officially dispensing advice, okay? So if you question any of the legal or financial strategies of anything that you see through Midlands REIA, please consult with qualified experts And please confirm that with them. Okay, that being said, I bring in speakers who have a great deal of confidence in what they say. So by all means, as I say, double check it, but keep in mind, I'm not just throwing people out there who don't know what they're talking about. Okay, a few things. Our REIA goals, and as you can see, we're pretty close to the end of 2020. One of the things I kept on I'm hearing over and over again from the few national speakers who come in is nationwide, only about 3% of the people who ever get into real estate like us common folks do, ever do a single deal. I'm talking like a wholesale deal, a subject to, a rehab, or whatever, okay? Only 3%, okay? And anyway, I see occasional posts like this gentleman here, Gerald Norden. I think he's like a search engine expert. But anyway, he confirms to me in some degree that this is the general percentage of success. I should say failure thrown about nationwide. In Columbia, I think it might be a little bit higher, but this is kind of the general consensus nationwide. Only 3% of us ever do a single deal. Keep that in mind because I'm getting to something. Okay, our goals for 2020 were to put more workshops. I mean, pre-COVID, but I'm still working on the workshop part. More workshops and more and better. This used to be subgroups. One of our members, Carlos Barrera, suggested I use the word cartels. Okay, so we'll go with Carlos. But more workshops and more or better cartels or subgroups. Now, I'm going to say this is where the 3% success rate comes in. Be wary about expensive, $25,000 plus, or in some cases, even $5,000 if you can't afford it, okay? These coaching programs, national and even some local gurus charge these exorbitant fees, to coach you to do real estate. And if you're one of the 97% who never do a single deal and you put this on your credit card or other credit programs, you're still stuck with the debt while the guru has your cash, okay? What I believe is this: it doesn't cost a whole lot of money to learn how to do even the basics of this business. Earn it first, okay? And then if you want to go into a coaching program of sorts, go ahead, okay? But don't put it on credit. Otherwise, you might regret that. I mean, anyway, earn it first. Then if you want to go into a coaching program, then put it into coaching. Oh, sorry, I have to admit somebody. I hate that, okay? That Zoom makes you admit people now. But anyway, also along the ways, if you're one of the 97% who never does a single deal, maybe you just don't want to do this business. I mean, maybe it's just not for you. We've had several people sign up and they've gotten real estate licenses to say, hey, maybe I should try being an investor and a realtor. And they've decided they want to be realtors instead. Okay, that's fine. Anyway, our goal was to greatly increase affordably, keyword being affordably, to at least 50% the success rate, okay, in our markets. I can't talk about nationwide. To be honest with you, I don't care about nationwide. I care about what happens here in the Midlands of South Carolina, okay? For beginners, we want to get you up and running as soon as possible, independently from anyone else. And don't get me wrong. I mean, even from us. Don't get me wrong. We'd love to keep you as repeat members over and over year after year. But we know your situation changes and whatnot, and we hope you can take some of the basics that you learn in our association or any of the other ones here and take it to whatever state you go to, okay? But ultimately, we'd like to get you up and running as quickly as possible. The way we do that here in Midlands REIA is for the members, one of the first things I want to schedule with you is three introductory webinars. The first one being how to find deals, how to find these motivated sellers, if you will. And we go through in-depth online sources to begin with, as well as some offline sources. The second webinar is some of the basics of wholesaling, okay? Wholesaling is not rocket science, but I think it requires some explanation. And I'll show you the contract I use that keeps you risk-free pretty much, okay? And the third webinar, which I think is the most fun, is a creative finance. I cover subject twos, piggybacking off the existing mortgage, if you will, sandwich lease options, owner financing, stuff like that, okay? So that's what I can do. That's what I personally do, as well as we have great support cast with us, like Andy Holland has been great support. Tom and Louise Johns are frankly, they're private lenders. They're great private lenders to hit up. Adrian and Mark Morgan, same thing. They're some of the more prolific private members in our group. But anyway, that's how we try to get you up and running as quickly as possible, independently from anyone else. For the advanced investors, should you decide you want to stay with us over some time, we want to provide the best continuing resources possible. And I'm always also learning from you. Okay. Like for example, one of my favorite attorneys, Rich Boland. I learned this at lunch today. Rich Boland recently, well, within the past couple months, left for another law firm, and he can still do all the creative stuff that he was doing before. I was led astray by that, so I highly recommend using Rich Boland for especially the creative deals. Okay, he's one of the best resources I can figure. Okay, why the low success rate? This 3%. I actually got this from a Legal Shield seminar I attended. It's not that our business is particularly hard to do. It's just too easy to not do what we're supposed to get the deal flow coming in. Okay, as you can see here, over time, success and failure look very similar until you really get into a groove. And somewhere along here, you'll see you start to experience success. And somewhere here, if you keep making mistakes and you don't correct, you ultimately will see some failure. Okay. But I think what happens is that 97% of the people quit somewhere along this timeline where success and failure look alike, because there's such a low barrier of entry to get into our business. They figure, hey, I didn't put a whole lot into it to get into it. I might as well just jump right back out. I heard someone say once, you can quit anytime. Why quit now? Okay, so give that one some thought and just say, just keep at it. Consistency and tenacity. How does a good club or association help? And this is not just for us. This is just for any club. In my opinion, offering a good club or association will offer an abundance of resources. Provide great networking. Networking is so important. Give the best training possible. I don't know if ours is the best training, but we're trying our darndest. 2 weekends ago, we had Eddie Sabina and Blair Koblisky give a rehab training, a workshop at Blair's newest rehab project. There's going to be 3 actually there. The beginning one, which is pre-rehab, before rehab. The second one is in the middle of rehab. And the last one is going to be after Blair's done with it. And she does a great job on rehabs. Also, a good association is always seeking to improve and adapt. Okay. When we hit the next recession, okay, maybe cash out wholesales and rehabs are not the way to go. That's where we start digging deep into the creative finance stuff. Okay. And also, a good association will learn and teach best practices for local investing. For the Legal Shield portion, I was telling Sarah, our Legal Shield director, that I'm using Legal Shield to see if I can get a mortgage on a residential house invalidated. I'm partnering with this one with a couple of our members, Lisa, Julie, and Trisha. And so I'm trying to see if we can legally get the mortgage invalidated. If that's the case, that's a killer deal. Okay. So anyway, and if that works, of course, that's something we want to teach to the association. Okay. Annual membership benefits for Midlands REIA are discounts to national vendors and supply houses through REIC. Discounts on Midlands REIA trainings and workshops, and members. If it's a Midlands REIA training, purely Midlands REIA, we let the members in for free with some kind of nominal charge to non-members. Now, if it's an outside speaker, we occasionally bring in outside speakers and they have a training. We can't control the admission on that. Okay, but Midlands REIA trainings, we like to give them to members for free. No door fee to general meetings. Well, you know what? This is all online, so duh, there's no door fee to this one. I'm talking about the ones at the hotel when we start meeting physically at the hotel. Okay. Access to members area with local cash buyers list, documents, videos, and other resources. For those who have not seen, I'm sorry, folks. Okay, well, I can't pull it down. But anyway, there's a members area on our website. If you log in, you'll see like the documents and cash buyers. Now, the local cash buyers list, it has their phone numbers and everything. And I think it's like 54 local cash buyers. These are proven buyers. I've done business with them. I've seen people refer other houses to them and whatnot, and I've seen them at foreclosure sales, so they're proven cash buyers. And of course, there's a few other benefits I haven't mentioned, but if you could, please see midlandsrea.com for details. Okay, we're always open to suggestions on how to improve. Workshops, do you want to see more or less? Okay, or what kind of workshops do you want to see? Topics, what kind of topics you want to see us cover? If you go to our website, there is actually a list of topics we try to cover each year. Sometimes we can't cover them all, but we're always open to seeing what you want to learn. Okay, subgroups, are there any ideas for subgroups you want to start? Well, now it's not really necessarily a subgroup. Blair Koblisky, we were talking, and we'd like to get her started with her own association up in the Sand Hills area called Sand Hills REIA. So, because I know after a long day of work, people who live up in that area, they don't want to drive into Columbia or Irmo just for a REIA meeting. Okay, I use that term loosely because I think REIA meetings are very important. So when people start meeting at physical locations again, hopefully Blair will have, now that's not a subgroup, that's her REIA. Okay, hopefully Blair will have her REIA up and running, and we're going to do everything we can to help her get that up and running, just because I believe that Blair is a really good investor resource. Okay, I am going to have to mute everybody again. Sorry, folks. Okay. All right. Yeah, that was kind of annoying. Okay, anyway, so keep an eye on that, and hopefully Blair's group will be ready when this pandemic ends. Now, we are on all the major social media pages, okay? And if nothing else, though, you might want to consider joining our Facebook group at the Money Mastermind group. This is the link to it, but it's also on our website off to the right, okay? For some reason, I'm having a hard time pulling up our website, but it is off to the right where it says it's in red. Click here for money and deals. Okay. So if nothing else, you might want to consider joining this. You don't even have to be a member to join this. Okay. We just want to enhance deal flow. So click there, click join, and you'll be approved. I mean, assuming you're not like some spammer from out of the country. Okay. We do kind of screen against stuff like that. And as I mentioned before, we have over 50 proven cash buyers. I believe it's up at 54. And yes, their phone numbers are there. So if you wanted to call Tony, give him a call there. You want to call Adam, give him a call there. Okay. You have to log in for that, though. Now, for a year, we charge typically for a year, $125 a year and $200 for a couple. Okay. Now, there's something called REIA bucks that can be earned by referring people to the association. For example, Kristen Johnson, she referred 2 people here who signed up. So she got 40 REIA bucks for that. Okay. And that can be credited towards things like courses that, even our outside vendors will sell, and as well as the annual memberships and stuff like that. Okay. Anyway, normally for non-members, there would be normally a $20 fee at the door, but of course there's no door fee because this is online, okay, unless you have a door in your office, whatever, okay. Now, when we get our meetings back at our usual location, these door fees are going to go back into effect, though, okay. Calendar of events. Again, I can't pull this up because I can't get to my website, but normally we put events on our calendar of events. If you click calendar of events on the tab, you see what's available. For example, our meeting tonight is on October 12th. Tonight it's listed here. On Wednesday, it's not there yet. There's going to be a 1 Million Cups meeting, which is a great networking event that's normally held downtown at the Richland Library. So the link for that is going to be put there after the meeting tonight. And this is being constantly updated. So if you might want to consider checking this regularly. You'll see a lot of the groups like the Women in Real Estate group, the WIRE group, they haven't been holding a whole lot of meetings because of COVID-19. But once they start up again, those will also be there, as well as the other REIAs, Columbia REIA, hopefully Blair's REIA, if we can get that thing going, okay? Okay, let's talk about what tonight's topic is about. This is about business and tax planning. I met the speaker, Jeff Harmon. I met him at a different event concerning another business called, it's basically a life app, if you will. But anyway, Jeff is an experienced business and tax planning coach. And I've had several lunches with him, and I see him speak every Tuesday evening at the Lexington Chamber of Commerce. And wow, he's got some really great stuff. Okay. Now tonight he's going to be talking mainly about tax planning, tax tips and whatnot. But his ultimate goal is, as a business coach and strategist, is how to help us achieve financial freedom through our businesses. I mean, ultimately, let's face it, we don't run businesses just for the purpose of running a business. We want financial freedom. Okay, Jeff, for a little bit of a background, he's founder and president of TFL Worldwide, a business coaching firm. He's a certified human behavior consultant and former certified public accountant. He coaches and advises individuals and business owners to practice proactive tax planning, as well as gives business coaching. And he's a public speaker who's helped hundreds of people with taxes in their business operations over the last 17 years. Now I'm going to make this a recording of this video available, at our website, not in the members area. It's publicly available. So even if you don't write this down, his contact information, if you like what you see, then you'll see it on the recording. Let me see if I can find Jeff. I can't speak well enough about Jeff and his mastery of these topics. Okay, let me see if I can find Jeff here. Oh, there he is. Okay. Okay, Jeff, I'm asking you to unmute. Can you see that button?
Yes, sir.
Okay, great. Okay, Jeff, I'm going to make you a co-host, and if you could switch over control.
Yep.
Okay, great. Oh yeah, okay, thank you, Jeff. That's great.
All right. Does this help? Can everybody see the screen?
Absolutely. Thank you, Jeff.
Well, I guess we'll get started then, huh? How many of y'all out there would like to stop paying so much in taxes? Can't really see everybody's faces, so I don't know. So I'll just assume everybody's nodding their head yes. I do want to say thank you very much, Bob, for letting me come on tonight. It's really been a pleasure getting to know you over the last several months. And I really appreciate Kathy Fittner introducing us. And I tell you, Sarah, that was an awesome presentation. And I'm very familiar with Legal Shield, and I'll go ahead and give it my complete thumbs up also. So I tell you, if there are people on here that are not members of that, that's an excellent organization that gives you a lot of really, really good help. And if you don't have legal help, you'll wish you did when you have a problem. And so you need to dig your well before you're thirsty. So that was a great job, Sarah. I really appreciate it. Well, what I'm going to try to run through tonight is I'm going to kind of go through some of the mistakes that people make on their taxes. I'm going to try to give you as much tax advice tonight, or tax education, if you want to call it tonight. I hope I don't insult anybody. I have the gift of the insult sometimes, because the truth kind of hurts before it helps. And a lot of people don't want to hear the truth. They just want to live in their little world. But most people overpay their taxes every year. And when I say most, it's like 97%. And the common thing I hear all the time too is that I have a really good CPA or have a really good preparer. And a crooked line doesn't know it's crooked till it gets up next to a straight line either. So so anyway, we're gonna have some fun tonight. But my main goal really is to help Bob and help your group grow. Okay. I really think that people out there that are trying to own and operate their own business, they have to go through enough hurdles. And one of them is the IRS. And you must become aware in order to beware. In other words, you must be aware of your tax situation to beware. So I'm going to walk through this presentation. And then what I'm going to do is hopefully I'll get finished in enough time that I'm going to open up some questions at the end. If you would let me go through everything first, though, that would probably be the best way instead of interrupting in between. But I will open it up. We'll probably have about 10 or 15 minutes at the end that I'll be glad to answer any tax questions or whatever, and try to get people where they want to go. So let's start out with the number one thing that people do that costs them a lot of money in taxes is they fail to plan. because most people are under the very wrong assumption that tax preparation is tax planning. And there are three things that you want your CPA or your tax preparer to do. And those three things don't occur except under very, very unusual circumstances. And the first one is that you need to have some tax planning work done. The second, which we'll get into in a second, is you need to have audit proofing done where you make sure you can survive an IRS audit. And then the third is you actually need to prepare your taxes. So most people hire a preparer and they don't have a planner. Now, what do I mean by that? Well, when is the last time your tax guy came to you and said, here's a really good idea that'll save you a lot of money on your taxes. Let me show you how to implement it this year. And the answer for that question is typically never, because tax preparers don't give tax advice. You can ask them all day long about stuff and they'll tell you something when you ask them, but they don't offer advice. And here's why they don't offer advice. But you think they do because you hired them to actually, most people hire a tax preparer because they think that they're gonna tell them everything that they can deduct. But let's just say your tax bill last year was $1,000 for doing all your tax work and everything. And then all of a sudden this year it was $2,500 and everything was the same as last year. You'd probably have a little small freak out, right? And so when you ask your preparer, well, why does my bill go up by $1,500? You say, well, I was researching some stuff that I thought might help you, but it turns out it doesn't, but I still got to bill you for the time. And you go, I didn't ask you to do research, but in the back of your mind, you really did because you thought that they were researching stuff for you. So let's just get a little bit nicer scenario. Let's just say that he found some stuff. Let's just say that your bill went from $1,000 to $2,500, but he tells you he saved you $2,000 in taxes. Well, do you feel like you saved anything since you gave it all to him? You don't really feel like you did. So most places do not do any tax preparation most places don't do anything but tax preparation work. And so there's nothing wrong with the strategy to avoid the payment of taxes. The Internal Revenue doesn't prevent that. That's William Rehnquist, by the way. He was a Chief Justice of the Supreme Court. Now, what happens if you don't plan? Well, I'll tell you what happens if you don't plan. Here are your tax brackets. And depending on where you are, you're going to pay anywhere between 10 to 37% in taxes for money you make. And there are the brackets there for you. You can look this up. This is not any kind of brainstorming information here. But most people forget about if you're self-employed, you have that Schedule C, like Sarah was talking about earlier. There's another 15.3% for FICA. And this does not include state. So if we take the top rate, let's just say somebody who does really well one year, they make 37%, plus they pay 15% in FICA, then they pay 7% in state, it gets kind of up there. And so you have a silent partner that works with you every day, and that silent partner doesn't help you get anything done, but he's there to take half of whatever you make. But then you look at other people and you wonder, well, how do they not pay as much in taxes? I mean, and I'm not trying to be Democrat or Republican tonight, but if you go back in the archives, when Mitt Romney ran, he made millions and millions of dollars. He shared his tax returns, and he paid less than 15% in taxes. Now, excuse me, if the highest bracket is $500,000 at 37%, how does someone make $20 million and pay less than 15% in taxes? Well, he didn't do anything illegal. What he had is a team of lawyers and accountants that make sure he was structured the right way to make sure that he paid the least amount of taxes possible. Now, you can say that's not fair all you want to, but that's the law. And like I said, and I'm not getting political tonight. Everybody thinks that Donald Trump's a crook sometimes because he doesn't pay much in taxes. No, he's a smart, shrewd business owner. And like I said, I'm not being political, but if you had a situation, do you want to give more to the government? I've never run into people say, I'd like to put some more in. Can I just add an extra check and just throw it in there because I just want to make sure I'm helping out? I don't run into those kind of people. Now, I run into a lot of people that say I'm willing to pay my fair share. I'm willing to render unto Caesar what is his. I just don't want to render a penny more. So how do I make sure that I get up all the way close to the line, but don't cross over the line? Does that make sense? And so that's what we're talking about tonight. I'm not talking about crazy stuff tonight. We're going to show you some things that you can do. And they're all very legal, but they're all very, very important if you follow them. So here's the second mistake that people make is I call it audit paranoia. And what it really should be is lack of audit respect. When I say lack of audit respect, this is something else you think you hire your preparer to do. You think because your preparer prepares your return that you're safe. That because you found a professional to put the right numbers on the right form and follow by the right deadline, that if you get audited by the IRS, you'll be okay. And I'll go ahead and tell you that's just not true. Because the requirements for me to prepare something for you are very different than the examination requirements. Very, very different. And I want you to remind you of something. When you sign your tax return, at the very bottom, it says under penalty of perjury, everything on this return I've examined is true and correct. And guess what happens if it's not? That's a 5-year felony. That's loss of your licenses. That's loss of your right to vote. That's loss of your right to carry a gun. There's a lot of losses for that. And you sign that tax return every year that you know everything on it is true and correct. Now, your preparer signs a get out of jail quick card. He gets you to sign an engagement letter that says that you brought him everything you're supposed to bring him and you have all the right documentation so you can survive an audit. And the truth about the matter is you don't know what you brought him because this is not your wheelhouse, most likely. So let me give you some advice here. There's 2 laws you need to understand here when it comes to this situation. When it comes to getting audited by the IRS. One's called the law of the burden of proof, and the other one's called the law of recollection. Now, these aren't laws per se. You're not going to find them in the code somewhere. They just happen to be the way the IRS operates. So it's kind of like, I don't know if you remember that movie, A Few Good Men. They say, can you show me in this book where a code red is? And the guy couldn't show him what a code red was. And then he grabs a book back and he says, can you show me where the mess hall is? Because the mess hall is not in the code either, but yet they ate 3 meals a day. So these laws are here, whether you know about them or not. So the first law is called the law of the burden of proof. And the law of the burden of proof states that if you get audited by the IRS, excuse me, and they're examining your return, then you must present certain documentary evidence to the IRS. And if you present that, what's required by law, then the burden of proof is on the IRS to disprove a transaction. But if you're missing an element, then the law of the burden of proof says you're now on the other side and you must prove a transaction. And you never want to be on a situation where you're trying to prove something to the IRS because you're missing data. The second law is called the law of recollection. The law of recollection is a pretty simple law. It says that the sooner that something is documented, the more reliable it is. And the longer the period of time that goes by, the less reliable it is. Kind of makes sense, right? If I ask you what you did yesterday, you'd probably tell me. If I ask you what you did a year ago, you'd go, don't know what I did a year ago today. Well, so let's just take a simple scenario because all you guys work in real estate and everything else. So let's just say you went down to Lowe's to buy some paint for your office. So you went down to Lowe's, you bought $500 of paint to paint your office. You wrote a check for it out of your business account. Your accountant classified it in QuickBooks or something as repairs and maintenance. You've got the receipt from Lowe's. You got the canceled check from Lowe's, and it's classified as repairs and maintenance. Think you're going to survive an audit? Well, the answer is no. Because there's 4 elements you got to have. Time, place, amount spent, and business purpose. And in my example, I didn't say that you wrote the business purpose down. It was assumed because it went into repairs and maintenance, but nowhere on the check in the memo line did you write paint for office, and nowhere on the receipt did you write paint for office. So that IRS lady or man could look at you and say, Well, I think that paint was for your house because you're missing one of the elements. Then you have another problem. It's 2 years later that you're being audited. So how are you going to prove that 2 years ago that paint was used to paint your office as opposed to your house? You can't. So even though you did everything you thought you were doing right, you just lost a perfectly good deduction because of ignorance. And I've seen it happen. I just picked up a client this week that they had $140,000 worth of total revenue for the year, Schedule C business, and they didn't keep their receipts. Their accountant didn't understand how to protect them in an audit and basically said to the auditor, well, we're missing this, we're missing that, but we brought this, we brought this. And the auditor was super nice. Oh yeah, that'd be fine. Oh yeah, we'll make things work with that. And they nod their heads and so forth. By the way, you should never go into an audit without help, but you also need to make sure you go into an audit with help and make sure the person knows what we're talking about. Because the IRS agent was very nice. Oh, yeah, that's okay. Yeah, we'll work through that. We'll work through. They denied $129,000 out of $132,000 of expenses for lack of documentation. This client who grossed $140,000 now owes $60,000 in taxes. Why? Because they didn't have all 4 elements. And then once they went into that audit, the law of the burden of proof kicked in, the law of recollection kicked in. Now you're trying to defend something that's 2 years old. So let me go and give you another scenario, give you some hope. I'm not trying to teach you how to lie, cheat, or steal, but let's just say that you went in to Lowe's, you go buy $500 of paint to paint your house, paint your kid's room. But you're not very honest. So you used your business checkbook and you wrote the check, the $500 check out of your business checkbook, and you wrote in the memo line, paint for office. And you wrote on the receipt, paint for office, even though it was for your house. You lied. But in an audit, what's going to happen? You've got all 4 elements. How is the IRS going to disprove that transaction? They're not, which means you just got away with lying. So the point is this, not to lie, cheat, or steal. The point is this, the IRS doesn't care what you deduct. They care what you document. But if you don't know what to document, then you're going to have a problem. You must become aware in order to beware. Now, let's just look at this for a second again. So if you look at these percentages out here, Schedule C's get audited 2.4% of the time in 2018. If they make $100,000 to $200,000. Look what the S corporation is, 0.2%. That's more than a 10 times reduction because you changed entity class from a Schedule C to an S Corp. Now, being an S corporation in real estate might not be a good idea, but look what happens if you go to a partnership. In other words, you form an LLC and you have a different member. There's some different rules out there. So the first thing, though, I want to start is you don't plan. The second, though, is you don't understand how dangerous it is to get audited. You're only going to get audited a few percentage. So somebody, if it's only 5% a year, that means you could go 20 years without being audited. It's only 1 year out of 20. But if you don't have records, it can be really, really, really expensive. And so make sure that you keep good records. And if you don't know what records to keep, then you need to learn. You need to learn how to keep them. You need to learn how to keep them the right way. All right. Wrong business entity. I kind of led up to this, right? See, there's 4 main entities out there. There's more than that. There's all kind of trust and all kind of stuff that you can do. But mainly there's a C Corp, an S Corp, a partnership, and a sole proprietor. And each one of them have tax benefits and each one of them have tax detriments. In other words, some things are good to have, some things are bad. Like corporations provide a lot of protection. But if you run real estate through them and you flip something, you don't get any capital gains treatment for it. And sole proprietors are really good. You can hire your kids and so forth, and you do a lot of things through there, but they get to pay extra FICA. And S Corps can be really good too, but then you have some problems with there. So having the right business entity is really important. And then not only having the right business entity, but are you set up properly in the state? And going back to what Sarah does, Legal Shield can provide you some of this information to be able to make sure you get protected. You have an operating agreement. You have the right buy-sell agreements in there. You have Anyway, there's a lot of different things you need to have, but you need to be structured the right way. And this is important. I wouldn't miss out on this. Now, here's the thing. Can you have more than one entity? And the answer is yes. You can have all four. You have a business purpose for all of them. There's some rules with it. So the whole idea to lower your taxes is figure out which one fits you best and which one provides you the best protection, which ones provides you the best business model. And when you provide the best protection, the best business model, there may or may not be tax benefits to that you can then take advantage of. And it's really important that you get this down pat. You can really overpay your taxes a lot if you're a sole proprietor, and you can expose yourself to a lot of auditing. And so changing business structure is a big deal, and making sure you have the right thing. All right. And then you got retirement plans. Everybody's always telling you need to have a retirement plan, blah, 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 blah. I'm just going to keep going with that. And you know what? Retirement plans are a good thing. If you don't plan for the future, then you have no plan at all. You won't have a future because you don't plan. But do you set up a set? You know what I'm saying? Which is, that's a good thing to set up, but there's the problems with it. A simple plan's a really good one. There's a 401k. There's 403bs. We could go and name them all. And they all have different limits. And I'm not here to beat anybody up. So if you're in this field, I'm not here to, but you can't always trust what your financial advisor says, because your financial advisor makes a commission off of telling you what to do sometimes. And sometimes, not all the time. In fact, it's kind of rare, probably only about 10% of the time, but 9% of the time you'll get good advice. But that 10%, somebody might be doing it just for a commission. And so you need to really understand your different plans. And if you're in real estate, then you really need to look into self-directed IRAs. You need to look into self-directed Roth IRAs. You need to look into setting up plans where you can actually operate checkbook IRAs, where you can actually, you're in control of everything and it's part of your IRA. And these aren't that hard to set up and they're not that hard to follow. And it also allows you to then pick up financial partners. Because let's just say you have $10,000 in a self-directed IRA, somebody else has $10,000 in a self-directed IRA, somebody else has 40, y'all can pull together into a job and you could make $100,000 on that job and none of you would pay any taxes on it. But you got to explore this. You got to look into this. This has to be done the right way. The IRS gets really, really nasty when it comes to what they call the ERISA laws, which are your employment laws when it comes to retirement plans. And so they have to be done right. And you can get a lot of help from a lot of different people, but you need to work on this. And if you don't have one, then you're overpaying your taxes. If you don't have one of these plans set up, the right one for you, then you're overpaying your taxes. All right, missing family employment. This is a big deal, especially with the Trump plan. And like I said, I'm not here to be political, but I'm just going to speak truth. The tax plan that he put out is very, very beneficial to anybody who wants to make money, because he changed the standard deduction to $12,400. Which means a 7-year-old child can earn $12,400 tax-free. And then the next $9,800 is only taxed at 10%. Now, this is a linear situation about hiring your kids. And you got to remember, you got to go all the way back. Okay, let's just go back to the history of this. In 1913, when they enacted the tax laws back in 1913, there were no tax laws before then. But in 1913, when they enacted the tax laws, 95% of people in America were self-employed in a family-owned business. 95% of people in America were self-employed in a family-owned business. So hiring your kids and having them work for you was a normal thing. Today, it's not so normal. But what if you could hire your kids to help you? Well, if you're in a 30% tax bracket and you could move $10,000 a year or $12,000 a year over to your child, then you would avoid that 30% tax. That's $3,600 in taxes you would save. But you're still in control of the money because it's in an UGMA account. Now, it can't be used for shelter and support, but it can be used for anything else like that. They join some kind of high school league or something like that, or they're doing something. They want to play basketball during the summer, or they baseball during the summer. They get on some traveling team. Or here's a better idea. What if you put it into a self-directed IRA form? That's right. Believe it or not, even though it's not subject to FICA and Medicare or income tax, it's earned income. So you could actually move $10,000 into a Roth IRA. If you did this from age 8 to 18, that's $100,000 you would move over a 10-year period. You'd have a financial partner that you could work with on doing deals. Or they could take the money out to buy their first home, or they could take their money out to pay for their college tuition, or they could wait till they're 59 and a half to draw that. But if it was set up properly, they'd never pay tax on that money. This is a great planning idea. And the cool part about it is it's linear. So it applies to children and also grandchildren. And it also applies to grandparents, as long as it's linear, going up and down. So some of you guys are out there and trying to do some investing and trying to make sure that you don't give your money to your kids, but you want to make sure your grandkids are taken care of. There's a biblical thing out there. I'm not going to throw the Bible at anybody, but it says you should prepare your children's children. Okay, so there's a theory behind that. So what if you could help them out by putting money into a self-directed IRA or a Roth IRA for them? But now their jobs they have to do, there has to be a reasonable salary. There has to be a written job description. There has to be timesheets and checks. You follow me? It has to be in the child's name. You know what I'm saying? That FICA and FUTA is not paid. There's a lot of benefits to this. And so if you have children between 7 and 18, this is a really good planning idea. I have 6. I have 5 boys and a girl. This has been very useful as a real tax planning tool to reduce taxable income every year. I recommend that you look into it more. All right, missing medical benefits. Most people don't realize that they can deduct medical benefits. They think they're all been taken away and so forth because they think they got to go on Schedule A as an itemized deduction. And since the standard deduction is so high, you can't get it. And then there's a 7.5% limit. And so if you ask your average tax preparer, he'll pretty much tell you that your medical costs are not deductible. Well, guess what? There's an old code section out there. It's called Section 105, Medical Expense Reimbursement Plans, MERPs. Now, think about it. The code section, remember, let me just back up for a second. The code sections out there basically start at 100. There's some that go all the way into the 60s and 40s or whatever, but your basic code started around 100. And this is code section 105. This has been around since like 1913. And you can actually write off medical expenses. You can write off stuff that you think that you can't write off right now. Now you have to have a medical expense reimbursement plan set up. You have to have a couple-page document put together. There's some rules and regulations you have to follow. But if you're in a situation where you're paying for benefits for someone, like let's just use a scenario. Let's just say, for instance, that you're having to take care of your dad. You're having to take care of an elder. You follow me? Your dad, your mom, your grandma, something like that. Well, if they work for you, they could draw a very minimal salary to work for you. And then you could have all their medical expenses they have to come out of pocket or pay for through the medical reimbursement plan. So what if they're having to come out of pocket $20,000 a year on stuff after all their insurance and everything else? You follow me? They're still coming out of pocket. No one's deducting that. What if you could? And if you're helping them out anyway, because you were doing that, because you're trying to make sure they took care of you when you were young, you follow me? They took care of you when you couldn't take care of yourself, but now you have to take care of them some. Well, at least you should be able to deduct that cost. So the medical expense reimbursement plan is an excellent way for you to actually deduct medical costs. Does it fit every situation? No. Does it fit every entity? No. Guess what? It's not allowed in an S corporation. So remember I told you there's benefits and detriments to everything? So if you have an S corporation, you can't do the medical reimbursement plan, but that might be a reason to set up a C corp. Now it can't be the main reason because you can never do anything for tax purposes. You have to do everything that you do for business purposes and economic gain purposes. You must be in the pursuit of profit. You can't do something just for the tax benefit. So if anybody ever tells you that, you can't. You have to do things for what they call return on investment. And if they have a tax benefit, then you get to benefit from that. But you can't just set up things for purely tax reasons. But you could set this up in a C Corp. You could set this up in a sole proprietor. In other words, a Schedule C. But you can't do it in an S. And in partnerships, there's some rules with it. So these are things that you need to have someone who understands this material helping you do this. Most tax preparers don't do this. They take the information you provide them, they put it on the right form, and they file by the right deadline. All right, missing a home office. Home office is a big deal. For years and years and years, this was audited. The IRS hated this deduction, but that was back in the 70s, people. That's because it was really difficult in the 1970s to have a home office. Very few people had the money or the resources to have all their technology in their house. Today, it's a common thing. Today, people have fax machines. And I go, fax machines? My God, who has one of those still? They still have them. They still use, the IRS uses them, by the way. They don't use email very much at all. But most people have computer, they have phone, they have access. And so the home office deduction, and finally, the IRS gave up auditing this, even though your accountant may tell you different now, because a lot of them are still pretty archaic. They gave it up, and they actually have a safe harbor. They'll give you a $1,500 deduction. It's a safe harbor deduction on your return if you have a home office or you state you have one. And if all you'll claim is just $1,500, they'll say they won't audit you for it. They'll give it to you. Now that should like raise red flags for you. That's supposed to be like a joke because most people think they're going to get red flags on them. So I'm going to flip it back around. It should raise red flags that the IRS will give you a $1,500 deduction. If they're willing to give you one, I wonder what your real deduction will be if you learn how to calculate it. And the real answer is around $5,000 or $6,000. So the home office deduction will give you a lot of deductions for things that you might be surprised at. But there's some rules. There's what's called an indirect cost and a direct cost, you know what I'm saying? And you've got to figure out your business use percentage, your BUP. You have to figure out how to track things properly so you can deduct it the right way. But it also does a big thing, which tells into the next thing we'll talk about, which is car, is if you have a home office, it's really hard to commute because you always leave from your home office to go to wherever you're going. And you basically end up being able to take almost all your automobile deductions or all your automobile miles because there is no commuting miles anymore. See, these are not gifts that an employee has. These are gifts called Section 162, which is a business expense. And when you're a business owner, you get business expenses. The difference in an employee and a self-employed person is an employee pays money on the gross. So in other words, if somebody makes $100,000 as an employee, they get a W-2 for $100,000. They don't get to deduct anything, any of the costs associated with what they have to do to earn that money. They have to pay tax on the gross. As a business owner, if you make $100,000, you can deduct all the ordinary and necessary business expenses under Code Section 162 to come down to a net number. And then you pay tax on the net. But now if you didn't know you could deduct it, how much would it cost you? See, lack of understanding of this material can get really big. If you left off a $2,000 deduction because you didn't know about it, you're as happy as a clam because you're ignorant. And I'm not trying to call anybody on the phone either, but I'm saying the ostrich, when he puts his head in the sand and refuses to pay attention to what's going around, does not stop the lion from getting a meal. When you were a kid, you follow me, you got scared because the boogeyman's going to get you. So you put your sheet up over yourself in the bed, you follow me? Like the sheet's going to protect you from what's out there. See, when you don't know that you could deduct something, then you didn't know that it just cost you money. So a lot of times people will get something, you know, and I call TurboTax and Tax Slayer and all that kind of, and I'm not trying to bash, by the way. I'll just call it tax software. Fool's gold. Because it'll spit out a return that looks really pretty, and you have no idea what's on that return. And you say, man, I did it myself, and I only paid $100 for the software. I'm so smart. Yeah, but you left off a $2,000 deduction, and it cost you $600 in taxes. That return just cost you $700. You need to get advice there, but missing a home office is a big deal. All right, and then you got car expenses. Car and truck expenses, if you own a vehicle, there's an economic way for you to make sure that you never have to, you don't pay to operate your vehicle. The government pays you to operate your vehicle if you do it the right way. You should look at a car for its useful life. You should look at a car for how many miles you can put on it in the useful life of the car. And if there are business miles on there, then you get a deduction for that. But now the mileage method is not always the best method. It's one of three methods. There's a mileage method, there's an actual method, and then there's a reimbursement method. Most people are not aware of these, but somebody needs to tell you about them because they could cost you a lot of money. But when you look at some of the cost of operating different vehicles, the cost is very, very different. So you need to actually analyze. But here's the main thing with car and truck expenses you need to be aware of. And this is where this hurts, you follow me? You can tell your CPA or your tax preparer that you drove 15,000 miles last year, and he'll write it down in your tax return, and he'll give you your deduction at 58 cents a mile or 57 cents. I can't remember what it is right now, but he'll give you your deduction for it. But if you get audited, you better have the service receipts that show how many miles were put on the vehicle. And you better have a log that shows everywhere you went there was a business trip. And if you don't have that log and you don't have that service receipt, then you just lost that entire deduction. Now, let me get this right. I got to have a service receipt. That's right. You got to have a service history report. And you can't change your own oil. The IRS will not accept anything from you. They want it from a third party. So you need to get your car serviced every year, at least somewhere between Christmas and New Year's. So that way we can see a full year of how many miles we put on car. And everywhere you go by law, by the way, if you go anywhere, if you go to Midas, you go anywhere, Jiffy Lube, whatever, they're required by law because people used to drive around in cars when they get them. They would kind of like test drive them for a couple hundred miles. And so now all your auto places are required by law to record the mileage when it comes in, and they better not put more than a mile or two on there from it and test driving your car. So the IRS uses that for that information. Now, the other thing is you have to own your vehicle. When I say own it, you either have to own it or you can own it in the bank, you follow me? But leasing vehicles, there's whole different rules for leasing. And leasing is never advantageous. Don't let anybody ever tell you that leasing is a good idea. And if you do lease, I'm going to tell you, then you're just not fiscally responsible. Okay, and I know that, see, I told you I have the gift of insult, so I apologize to anybody who is leasing a vehicle. But you're not making money by doing that. You're losing money big time. Now, the laborer is worthy of his reward. So if you want to be wasteful in your money, you can be wasteful in your money. But leasing is a terrible idea. Now, it's a great idea if you're the leasing company. It's a terrible idea for a tax deduction and for the business owner. What's a really good idea is to learn how to buy a car that's 4 to 5 years old that has about 75,000 miles on it when you buy it. Because that's the optimal time to buy a vehicle. And then you want to run it to 200,000 miles and you want to take a full advantage of it. So you need to make sure that you pay attention to your car and truck expenses. If you do this the right way, the government will pay you to drive. You can eliminate your transportation costs because the government will subsidize it through the mileage method or through the actual method if you'll understand what you're doing there, okay? So that's really important. We'll move on. Missing meals entertainment. And somebody's gonna say, oh, you can't take entertainment anymore. Really? Well, you're right. Most of it you can't, but there's some of it you still can. There's still some ways to deduct entertainment. Now, associated entertainment is pretty much gone, but there's still ways around this. And it is only 50%. It's about to disappear for a lot of things. But you know what? It might come back. Yeah, that's right. It's on the thing that might come back. But when you're doing meals, they have to be with clients, prospects, referrals. And you have to have 5 elements, not 4. You have to have the time, the place, the amount spent, who with, and the business purpose. And if you're missing any one of those elements, guess what? That deduction just went out the door. It's not going in. See, you can say you ate out. Your checkbook could show that you had $10,000 worth of eating out. It was all bona fide business meetings. But if you don't have all 5 elements that are required there, when you get audited, you're going to lose that deduction. So it's really, really important. But meals and entertainment can be deductible. And you know, here's a crazy one for you. If you go out to Pizza Hut and you had a nice business meeting with somebody at Pizza Hut, that's a 50% deduction. If you bought pizza into your home office and you met with somebody at your house and your home office and you ordered pizza in, that's 100% deductible. Didn't know that, did you? Here's an expansion of that concept. What if you invited somebody over and you decided to grill out? So you went by the grocery store and picked up some steaks, and you picked up some potatoes, you follow me, and you picked up some salad, picked up a bottle of wine, and you invited somebody to come over there for a bona fide business discussion. These are scenarios you should think about. How would you deduct that? Is that deductible? What are the requirements for that? Meals and entertainment is a missed business expenses. Entertainment's it's been cut out. It's been very restricted, but it may come back. That's why I keep telling people about it. But meals, you're still missing meals. But if you don't have those 5, time, place, amount spent, who with, and business purpose, you're going to lose that deduction. And lastly is our little sub commercial, I guess, for what we do. I'm a recovering CPA. I went to school at the University of South Carolina. I got an accounting degree. I got a finance degree. I got a master's in taxation. I passed the CPA exam. I got an insurance license, got a securities license. They told me the more licenses I got, the more money I'd make. And then I read this book called Think and Grow Rich by Napoleon Hill. And he said the problem with education today is it teaches general education. And general education, and I'm not trying to be disrespectful to anybody out here, he said it back in 1920, is the education for slaves. It's the education that keeps people enslaved when they only have general knowledge. The only way for you to have wealth in America, this is Napoleon Hill right in the 1920s, is you got to learn specified knowledge. You got to learn specific, specialized knowledge. You need to get good at something, not be a jack of all trades. Become a master of one. And if you're going to do real estate, if you're going to make this what you want to do, then making sure you take care of your taxes is really important. So we started a company called TFL Worldwide in 2003. I retired as a CPA in 2003. I started a business coaching firm. We started helping business owners learn to understand that, and this is just another one of my favorite jokes to say, but when the Pilgrims landed, the Indians weren't hiring. People came to America to start their own business. They came to America for what's called a meritocracy, the ability to make money on the merits of their own efforts. And when you get involved in your own business, guess what? There is no job discrimination. There is no discrimination at all. Can you perform? Your pay raise becomes effective when you do. But remember, you have a silent partner. That silent partner, if you're not paying attention, can take up to 40 or 50% of what you make. So we started, like I said, TFL Worldwide stands for Teaching Financial Leadership. Our whole goal is to teach you what we call the 3 keys to wealth. The first key to wealth is financial literacy, which is learn how to make more money, save more money, pay less in taxes legally, and get out of debt as soon as possible. The second key to financial freedom or wealth, if you want to call it, is understand leadership. Learn how to lead yourself and lead others. And the third is what we call leverage, which is systems thinking, not skills-based training. Skills-based training is I want to go from making $5 an hour to $10 an hour to $20 an hour to $30 an hour. Systems-based thinking is how do I get something to work on a system? How do I create rental properties that pay me over and over again? How do I create a business model like a Subway where I can stamp them out one after another? How do you make money on a system? And so I started a company, it's called TFL Worldwide, and we perform a service called the Business Checkup. And the Business Checkup is we look into business owners and we actually, we review their last year's tax returns. We point out things they're not doing on their taxes. We'll put together a full tax plan for you and show you every single deduction that you're entitled to and every single deduction that you're close to be entitled to if you can change this, this, or this. We also put you through a simulated audit. We will come in like the IRS. We will look at all your documentation. We will let you know whether you'd have survived or not. We'll tell you what would have happened. Now, we're on your side. We're here to educate. But the goal is when you go to bed at night, could you really survive an IRS audit? And if you're going to make money, the problem with making money and not filing returns properly is sometimes the penalties could be 100%. In other words, you didn't pay $10,000 in taxes, you could end up owing 20. This becomes very, very expensive. So we do audit proofing work. And then we give practical business advice. I'm a business owner. That's how Bob and I met. We're business owners. You're saying business owners are like iron sharpens iron. You get around other people. I haven't met Sarah yet, but I'm sure I'm going to in the next couple of weeks. We're going to get together and talk more because iron sharpens iron. And so we give practical business advice on family, home, and job, business, and investments. We will review your last couple of years' tax returns. If there were mistakes made or things left off, then we will turn around and we will help you amend those tax returns. I'm a business coach, so therefore some of the things I can't do. So if I'll run into you and you need an operating agreement, you need a will, I don't do those. We refer those out to the legal departments to make sure they get done. In fact, if you try to do them yourself, they'll throw you under the bus, man, for trying to do legal work without a license. You know, I don't really like doing tax preparation work anymore. We pretty much do the planning work and then the implementation work, and then we try to refer that work to another CPA. So if you already have a CPA, I'll get along fine with him. He'll just be amazed that you show up with like all these deductions that you didn't show up with before because you didn't know what to bring him before. So anyway, that's what we do. I really appreciate Bob letting us come talk. I'm going to stop sharing my screen here, and then I'm going to open it up and I'm going to answer any questions that anybody has. If they want to do that, we'll take, I don't know what time y'all supposed to end. I think he said 9. So I guess we have 30 minutes that, or however long. And if you don't have any questions, I understand. But so anyway, what is the name for code section 162? Code section 162 is just called business. That's the definition of a business expense. That's the code section of the IRS that allows you to deduct businesses. Let me look at this chat, see if there's anything out here. If y'all want to come on and ask questions, that'd probably be best. If you unmute and ask, it might be better. So anybody out there got any questions? This is your chance. Free tax advice tonight.
So Derek had his
What
hand
did the
up for a while.
acronym be?
I'm sorry, go ahead, Marissa, go ahead, I'm sorry.
I'm sorry, what was the acronym the BUP stand for? What did that stand
BUP stands for business use percentage. And
Gotcha.
so for the home office deduction, when you take the home office, you have the area that your house is, that's the home office is actually in. And then you have the whole area of your house. Let's just say your house is 2,000 square feet and your home office is 200, then it'd be 10%. When it comes to your car, they look at your service receipts and they say you put 25,000 miles on your car, and then you have to put together a log for how many miles you drove, and your business miles, say they total up to 20,000 miles. Well, then you'd only deduct 80%, you know what I'm saying, of all your actual expenditures for that. That's what's called business use percentage.
Okay, thank you.
Derek Jones had his hand up for much of the time. I don't know, Derek, do you still have a question?
No, I don't have a question. I was answering his original question about wanting to know more about this.
Oh, okay, thank you. Does anyone else have a question?
Yeah, this is Clarence Jones. On the BUP, if the primary property is already paid for, how do you use your business office expense at that price?
Oh, if it's already paid for? Well, actually,
No mortgage.
Yeah, that's fine. That's perfectly fine. There's anything that you have to pay for with that house. So let's just say you have to put a new roof on it. You have to put new carpet down. You have to replace a ceiling fan. So there's 2 types of expenditures. One's called a direct expense and one's called an indirect expense. So let's just say you have a home office and it's a bedroom in your house. If you put a ceiling fan in there, if you put a desk in there, you put a dresser in there, you put a computer in there, anything that you put that's in that room, that's 100% deductible. And so if you put a gun safe in there, that would be deductible. If you kept an AR-15 in there for security, that would be deductible. Anything that you put in that office would be deductible, okay? As long as there's a business reason behind it. And then you also have what's called indirect expense. Well, your indirect expense is the repairs and maintenance you have to do on your house all year long, plus your electricity bill, your security bill. If you decided to have your yard serviced, so you get your grass cut and everything else, anything that has to do with your house, because that's the front entrance of your office, then you're going to be able to deduct the percentage cost to whatever that square footage is, whether it's 10%, 8%, 9%, whatever. Now, obviously, we'll look at that calculation, and the government gives you $1,500 as a deduction. So if it doesn't exceed $1,500 and you just take the standard, safe harbor, and if it does exceed that, then we take the other, but you got to do the calculations to make it work. So think about your electric bill, and I'm just making up numbers here, but let's just say your electric bill is $100 a month. So if it's $100 a month, it's $1,200 at the end of the year, and 10% of your square footage, I'm saying, is an office, then you'd be deduct $120, which doesn't sound like a lot, but you'll start looking at other things. Now, the big thing it also helps also is once you establish your home office, then it works with your automobile deduction that there's no commuting. In other words, it allows you almost to get 100% deduction for your automobile because you travel from your home office to wherever you're going back to your home office. And so it works in two ways. And it's not, the mortgage on your house is actually irrelevant because the mortgage on your house is typically deducted either on Schedule A or it's picked up on the standard deduction, whichever is greater. So really the mortgage has nothing to do with whether or not the home office is a good deduction. Does that help?
Yes, sir. Thank you.
No problem. Glad to.
Hey, Jeff.
Yes, sir.
Hey, you had mentioned UGMA before, which is Uniform Gifts to Minors Act. Do you think there's a necessary or need to go into that a little more, or is that an area that
Oh yeah, I mean, I'll expand on it. I mean,
okay.
I'm not teaching law. I mean, this is educational, but let's just say, for instance, that you hired your 10-year-old granddaughter or daughter to work for you, and this is kind of a cool thing to understand too. You think you can't hire a child and pay them much money, but they actually can be paid commensurate with the experience of what they're doing and with the relative expense of what they're doing. And that's an important factor to understand because what are kids really good at, for instance? Computers and phones and internet and social media and everything else, correct? What would you have to pay someone to make sure that your social media is up to date and being taken care of the right way? You can pay someone $100 an hour to do that. Someone that could do website design and keep things up on a website, you can pay $100 an hour for someone that. So if your daughter who's 10 can handle that kind of stuff, she could make, you'd have to take the $100 an hour, say she's 10, so therefore we're going to back her pay down to $40 an hour because we're making commensurate with what we're doing. But now you have she can work for $40 an hour. Now, if all she does is take your trash out, then that's a $10 an hour job at best. You know what I'm saying? So therefore, you got to have a lot of hours being worked. Now, I'm tying this back into UGMA. When you set up an account for a 10-year-old, it's an UGMA account, which means she doesn't necessarily have any control on it all. It's your account. Now, you do have to pay the money in there, and you cannot pay the money out for support or shelter, but you are in control of it. So it moves from your business checking account, you follow me, into her checking account, and it is her money. So you got to have a fiduciary responsibility with that. But you can decide based upon conversation with her, what's the best thing for her to do. And so you can save that money up. You could then decide to set up let's just set up a Roth IRA that you could, let's just say you can put $8,000 a year into the Roth IRA. Well, $8,000, you have to have earned income. She would have had earned income, but the income's not subject to tax because it's exempt. So now you got $8,000 you put into a Roth IRA for her, and then she keeps that account until she turns 18. She can then use that money to pay for school. She could use that money to pay for her first home, or she could continue to invest that money. So the Uniform Gift to Minors Act just makes sure that you have to transfer money. And this is my point. Like, you can't hire your kids and pay them cash and say, well, I paid them cash. Well, that's great, but you have a problem with what's called the definition of a business expense. And the definition of a business expense is there shall be allowed as a deduction all the ordinary and necessary expenses paid or incurred during the taxable year in the carrying on of a trade or business. Now, paid or incurred means that we can prove that it was paid or incurred. And when you get into cash payments for things like that, you can't prove it. But we do need to have a transfer of money, so you can't just move it into your account. It has to go into their account. So you would have to set up that UGMA account for them. Does that help? I don't know if I answered your whole question there or not. So.
Oh yeah, yeah. I thought it was important that other people understand it, and you know, you've got a little more in-depth understanding of it than I do. So, because you do it every day, I think.
We've done a few tax plans over the last
It
20
seems
years.
that way.
My whole philosophy is this, and I'll be very blunt with it, is render under seizure what is his, but not a penny more. And so our whole goal is to help business owners keep more of what they've earned. You work hard for it, and if the law says you have to pay this much in, then you pay this much in. But when you start paying in taxes out of ignorance, that's just not fiscally responsible. It's just not, it's not there. And going back to what Rehnquist said in the very beginning, and he went on with that statement. He said he thought it was fiscally, he thought it was un-American for you not to try to lower your taxes. And I don't know very many people. Maybe you know them. I mean, I'm not trying to pick on anybody. I've never met anybody that said, "Can I give some more?" I've never met anybody really that when they got a raise said, "No, I'm doing pretty good. I don't need that raise. I'll be all right. No, I just want to keep paid what I'm paid." Most people want to make more money, and so my philosophy is make more money, save more money, pay less in taxes legally, and of course, I'm a big fan of getting out of debt as soon as possible because I just think debt is the it's what holds everybody back is they're financially.
Yeah, if I may ask a question.
Please.
I'm looking at getting a small apartment complex. It's going to need a new roof and upfitting for plumbing and such. What kind of expenses am I looking at? The deductible or the depreciation and the improvements?
Repeat, you're a little muffled. So if you would repeat that for me, just so I can hear better. I'll turn my speaker up too, so I can hear you better. Go ahead.
Looking at an opportunity for a small apartment complex. I know it needs a new roof. I also going to have to do some upfitting of appliances as well as the plumbing. And I'll see if they would take the depreciation expenses. Anything that I should be looking for in the first year or in planning?
Well, actually, you want to look into your startup costs too, because any costs that you incur before you actually bought that or you went into that business deal. So when you're searching for something, you follow me, those are called startup costs, and you can deduct those startup costs there. But when you're going into purchasing a building like that, there's different types of depreciation that you're going to look into. So you want to make sure that you get things that you can expense right away if you need that expense. See, it also depends on your whole tax situation. So let's just say that you could use the deduction, then you want to apply the deduction. If you can't use the deduction, you don't want to lose it. And that's why Schedule Cs can be dangerous as opposed to a corporation, because you can actually carry things forward. You can also, the depreciation deduction ranges from anywhere from 3 years all the way out to 39 years. And so making sure that certain things are classified a certain way, so you fall into the bonus depreciation laws, because even though it's a 39-year property, that you could find it might qualify under 15 years. Well, if it qualifies under a 15-year statute or a 20-year statute, then you can actually take bonus depreciation, which means you take it all in the first year. And so really depreciation is a game that you can play, or it's a tool that you can use, I guess, to produce different results. Major corporations, they want to depreciate things as long as possible, because that way they can show as much of a profit as possible. So therefore they can get investors to invest more money in their stocks. Business owners typically want to try to make their cash flow equal their profits. Can you imagine a situation, and this is a worst case scenario with the building, is that you spend money out of pocket and you can't deduct it and then you owe taxes on it? I mean, that's a terrible scenario. And so you're looking at all the costs associated with all costs. The definition of business expense, again, is there shall be allowed as a deduction all, this is actually in the code, there shall be allowed as a deduction all the ordinary and necessary. So you got ordinary and necessary as your requirement. So let's go back. I don't know your certain situation, so I'm gonna try to address it without anything that's ordinary and necessary about you buying that piece of property, then that meets one of the definitions of a business expense. So there shall be allowed as a deduction all the ordinary and necessary expenses or whatever, paid or incurred. So can we prove we paid or incurred it? Paid means we have receipts for it. Incurred means we got a debt for it. Does that make sense? Paid or incurred during the taxable year, but there are some rules with that. So you can actually do things that are not always in the taxable year that can carry on from one year to the next or go back. And the carrying on of a trade or business, which means in the pursuit of profit. So we have to be doing something that we're in the pursuit of profit. In other words, you don't do anything if you weren't trying to make money. Was my intent to make money? Now here's the thing. You don't have to make money. You just had to intend to make money. So going back to that situation there, yes, you've got your utilities, you've got your roof, you've got any expenses that you incurred that were ordinary and necessary and they were in the pursuit of profit. Those should all be detailed and records should be kept. Now I want to throw something out just so people can understand this too. And this is a really vivid picture. And so just bear with me for a second, but it's really important going back to that audit proofing. If you got a knock on your door tonight and there were some police officers there, plainclothes police officers, investigators, and they ask you where you were last night at 7 o'clock. After you get over the shock of being asked, you follow me, if you can tell them where you were, their next question is going to come out of their mouth is, well, can anybody collaborate that you were there? Was there a witness there? Was there somebody that could prove that you were where you, let's just say you were at Buffalo Wild Wings having some wings. Is there anybody that can prove that? And if you say, my friend Tom was with me. Now, those police officers are not going to tell you why they're investigating you. They're not going to tell you what they're looking for. They're just going to verify whether or not you were really there. And once they find out you were really there, they're marking you off their list. You know what I'm saying? You're no longer a suspect anymore because they were asking you where at 7. If you can prove where you were at 7, then you obviously weren't wherever they were looking for, correct? Now, that's a very vivid picture, and it can pose the wrong problems, and I'm not trying to, but when you take a business deduction, imagine there's going to be someone across the table possibly looking at you and going, was that ordinary and necessary? Can you show me that you paid or incurred a debt for it or paid for it? And was it really in the pursuit of profit? And if you can answer those questions, yes, and you have the right documentation, then you should take every expense associated with that.
No, quick, one other thing. Those major expenses such as a roof or change out in plumbing, converting it over, do you take those directly as a bottom line expense down the P&L, or we put them up on the balance sheet?
You would want, that's all individual actually. There would be a bottom line expense as long as they meet the requirements of that. Some of the things have to be depreciated, but with the bonus depreciation deductions right now and the way that they changed rental properties where you can actually take section 179 and so forth on it, those things can go right on the Schedule E and be deducted. Now, you may want to put them on the balance sheet, depreciate them over 10 years if you're trying to show a profit, but most small business owners want to show the least amount of profit possible, and they want their profit to be tied back to their cash flow. If you don't have the cash for it, then you surely don't want to pay taxes on it. So yes, you could record those as a balance sheet item, but then you would take them off the balance sheet by depreciate them, or you could put them as an expense item. Now, expense items are typically items that are under $1,000. So once you get to the point you're expending something that's over $1,000 and up to 5, you can expense those items off. Now that becomes very, very important too for another rule. So you'll get me just rolling here on stuff. When you have property, you also have something called business personal property taxes. And when you put something on the balance sheet and take a depreciation deduction for it, it still shows up on your business property tax return that you got to file every year, the PT 100, because it's depreciated and you have to pay tax. So it's really stupid. You buy a desk and you get to pay tax on that desk every year because it's a business personal property. But if you expensed it, it wouldn't be on the balance sheet, so therefore it wouldn't be on that return. So that's kind of a double-edged question you asked me there. There's reasons to put it on the balance sheet and depreciate it, and there are rules for it, and then there are reasons to put it on as an expense and expense it out. And I know it sounds like an economist saying on the left hand and the right hand, but that's just kind of the way it is.
No, it's not. You're saying anything above 5,000, I should put it on the balance sheet. Anything under 5,000, I'm saying like the roof, if I change the plumbing out, I should put that up on the balance sheet as opposed to,
if you put it on the balance sheet now you're dealing with some laws here you got to follow. So these are general rules I'm telling you, okay? They're specifics you got to follow, but one of the things for it to go on the balance sheet is it has to have a useful life. So when you replace pipes, when you replace carpet, when you replace things like that, there's no useful life for that. You follow me? That's a repair. But if you purchase something that has value and maintains value and has a useful life, then you're typically required to depreciate it unless you're allowed to section it off and things like that. There's something called Section 179 that allows you to expense equipment. But so it's not a general rule of 5,000. It's whether or not it has a useful life and whether or not it maintains value. And so like repairing a roof is typically not something you depreciate. It's just something that is expensed. Another thing that goes into it is whether or not it's separated from the wall. So like if you repair a wall, that's different than putting up a divider, you know what I'm saying, that can be moved. So you got lots of little nuances, rules there that I probably can't get into in the greatest discussion tonight. I'm sorry, I'm not trying to be evasive or not answer your question.
Oh, no, I thank you very much.
Hey, Jeff.
Yes, sir.
A couple of things real quick. I just wanted to stress, and I think Bob is aware of this. I've been a presenter for the group a couple of times, but I bought my first corporation at 26, and I don't come from the type of background where, you know, the family was discussing taxes at the table. So at a very early point in my young career, and this goes back to having the corporation set up properly, is that I had the IRS garnish all of my bank accounts and wages 2 weeks before Christmas twice at a very young age. So having this corporation set up is very, very important. As you were talking about earlier, how important that is to have that set up properly.
Yeah, let me reiterate this. Very, very important. So I want to go. I'll make a very vivid image with this too. The IRS has unlimited resources. They can spend $100,000, and they will spend $100,000 to make you pay 10. They're not like a business owner. And Sarah's laughing. I can see that. In Legal Shield, you follow me, like if somebody owes me $2,000, I'm probably not going to sue you, because it's probably going to end up costing me more to sue you whether I collect or not. But the IRS's position is, if you tick them off, they'll spend $100,000. So, and so if you don't set things up the right way, I go back to that first example I used. The IRS is a compliance officer. So let me give you another example of that. If a police officer sees you run a red light, by law, he's supposed to pull you because you broke the law and you endangered people's lives. And I'm not going to get into all the, I'm talking good police officers. Okay. Let's just keep it with that. That's their job. But now once they pull you over, they have the discretion to write you a warning. The IRS doesn't issue warnings. And they also, and this is the time of year, so just watch it. So I'll just go ahead and say this too. Probably shouldn't put it on record. You probably should be recording this maybe. Anyway, but look at all the celebrities will get busted for tax fraud in the next couple months. Every year around Christmas and January, there's always some kind of big tax bust on people to keep people in mind that the IRS is all powerful. And so they are. And you should totally respect them. But now respecting them means being compliant. It doesn't mean you have to give them your arm and your shirt and your leg, you follow me, everything else. Render unto Caesar what is his, not a penny more. And I'm sorry that happened to you, TK, but yes, you need to make sure you have your documents set up the right way, and you need to be compliant because the IRS, they have a lot of resources.
Well, I was, you know, it's part of the mistake. It's part of the process of being self-employed. You know, some things you just have to learn, you know, by mistake, and then you just do your best to share it with as many other people as possible. So.
Oh, amen. And, you know, we don't learn best from our own experiences. We learn from other people's experiences if we'll learn. I would rather learn from somebody else's mistake than have to do that mistake myself. They say experience is the best teacher, but it's not. It's learn from other people's experiences. So
one more quick question, Jeff. What about setting yourself up as general contractor and subbing out work in reference to owning real estate. Is there any advantage? There used to be, because I bought my first property at 21, and I used to be able to set myself up as the GC. Are there any advantages? Can you talk to the group about that? Are there any still or any more advantages to setting yourself up as a general contractor and subbing things out?
Yeah, the IRS has a rule out there that they call them real estate professionals. And if you're a real estate professional, then you have different rules that apply to you on how you can deduct things and do things. And so there's still advantages to being, for instance, if you're going to be a real estate investor, to also have your real estate license so you can buy and sell, to have a general contracting license, because you're trying to qualify yourself. And Kathy knows this, we've had some of our discussions. The IRS is always trying to test you about, are you really a qualified professional? Because that's one of their ways. They have 9 ways they actually come after you to try to take away business deductions. And one of them is that you're not acting like a professional. And if they can prove that you're not acting like a professional, or you're not a professional, then they can take away deductions. And so, yes, having a contracting license, having a real estate license, these are things that help you get qualified under the IRS's view as a real estate professional. And that'd be important.
I have a question again. If I am a real estate agent and I plan on investing, would an LLC be appropriate for a business?
I'll go out on a limb here and say that there's a 99.99% chance that if you operate a business and you haven't set up an LLC, you should. Because once you set up the LLC, you can then leave it as an LLC, and then you're a sole proprietor. You can elect to be a corporation by filing a form, and then you get the benefits of a corporation. You can elect to be an S corporation. You have the benefits of the S corporation. So LLC provides a lot of protection, but not if you don't actually get an operating agreement done and get something to protect you. Not if you don't get someone like Sarah to actually help you get those forms the right way, because otherwise you file under what's called the Uniform Partnership Act, the Uniform, and those are nationwide general rules. They're not specific to South Carolina, and they can really hurt you. So they're not there to help you is the best way to put it. But if you're operating a business, you should have an LLC. It's a very strong general statement, but it's about 99% accurate. 99%
So Jeff,
accurate.
sorry, didn't mean to cut you off.
Oh, go ahead.
So I just put that last question in the chat box. I know we're getting close to time. You're going to jump off in a minute, but that question is related to utilizing 401k loans for startup capital. Any advice on that?
It's beautiful. I'm gonna give you an example of a tax planning idea. If you have 401k, we did a tax plan for a client, probably about 5 years ago now, and they had about $500,000 in their 401k. And it's called a business rollover, and it takes a tax attorney, and it costs a little bit of money to do it. And I'll run through some of those costs with you. But basically, if you took that $500,000 out of your 401k, you'd end up paying about $200,000 in taxes on it. And then you'd have $300,000 now to start your company. But if you actually follow some tax planning advice, you can work with a tax attorney and you can do what's called a business rollover. And you can actually start a C corporation, and you can roll all of your 401k into that business entity. And then that money that went into there is capital that can be used to start a business. And the cost of that is probably around 15 grand to do that, paying the attorney and all the documents and everything. And so we successfully helped someone about 5 years ago because they were about to just go ahead and take their money out, you follow me, and pay the $200,000 hit. And between my fees and the other fees that were associated, I think you end up paying like 18 grand out the door. And all $500,000 basically moved over. And that's a very, very successful company. I'm not gonna name them, but that's a very, very successful company in Columbia. You would know who they are because they're up into the millions of dollars in sales now because they were able to start a business with the number one thing most people don't have, and that's capital. And it's because they worked their guts out. Their husband and their wife worked their guts out for like 25 years, and they had this money they've saved up every year, and the combined 401ks, because we combined them, and they were able to move into the same company, and they moved over $500,000 for working capital. So yes, it's called a business rollover. You can do some Google searching for it. There are not very many attorneys in the country that do this. It's a pretty specialized thing, but there are different groups out there that do it. That's one of the things that we do is I'm the quarterback. I'm saying we run somebody needs a situation. I found the tax attorney. I acted like I got all the records put together. We did some valuation stuff, and between the two of us, we got that done. So yeah, using 401k money, the dumb way to do it, not the dumb way, that the expensive way to do it is say, oh, I got $45. I'm just going to pull $45 out, start my company, and I'll pay the tax bill. No, not the best way to do it.
Yeah, so I guess a little bit more, a little quicker, deeper dive on this is that I'm still a W-2 employee, and I don't plan on leaving my job. So there's loan opportunities, especially with the CARES Act, available to take those loans out. So I wouldn't be taking all the money out and rolling it onto a big company, but there's ample opportunity now to take a substantial amount of money out and can grab like 50K out of your 401k and utilize that for help start up capital and deals. So that's more direct with the question, is that something viable?
And yes, it's very viable. You just have to make sure you can pay the loan back, or what the rules are with your company about how to get the money back in. But yeah, that's definitely a way, because a lot of times you can borrow that money for 6 months, and then you can pay it right back. I'm saying there's some different companies have different rules for it, and you have to find the bylaws of your company. But using 401k money as a loan, if you feel really comfortable, I just have a belief system. I trust myself more than I trust the stock market. That's just my belief system. And I think you probably do too, Clarence, that if you took this 40 grand out and you applied it into something you were doing, you feel confident you'd have a better return on investment than what's going to happen if we leave it in the stock market and what happened. I mean, so, you know, that's definitely a good way to do things. As long as you just got to find out what the rules are about getting the money back.
Jeff, can you do a partial rollover and make a separate alley? Is that what you're saying?
Not if you're still there. Most likely, if you're still there, you can't do that. You follow me? You'd have to leave that employment to be able to get that money. Those are all, and that's why I do armchair stuff too, but work with financial advisors. That's when financial advisors do become important. So I talked about the different set plans and everything, because they're the ones that facilitate that rollover. That's partial rollovers do exist. It depends on company rules and the ERISA rules for the company and how they set things up. So yes, but partial rollovers, they can work, but they could be restricted. Loans are another situation, really good, but then they can be restricted about when the money's got to be returned. And if you don't meet those things, then it's a distribution that year. So therefore, but then again, there's tax planning around that too. Because I mean, if you took $20,000 out, but you end up investing in equipment, you can write that equipment off and have a loss. You can offset that income, and therefore the tax ramification is really only 10%, which is the penalty. And that's not bad necessarily sometimes as an expense. I mean, as a cost of capital, 10%.
Okay, but we have separate, a separate 401k in our age, you can get enough capital and you can just roll one of those over without having any problems, because you're not taxed in from the employment standpoint.
I think the answer would be yes. That you can roll over different ones, but and by the way, I didn't mention this before. One of our services, we do a free tax analysis. We'll look at your last couple of years' returns and we'll go through the information and answer questions. If we can't help you, obviously we'll try to do an engagement letter with you. And if we can't help you, we'll refer you to whoever we think can. But our goal is to help people like everybody on this call make more money, save more money, pay less tax, and get out of debt as possible. So some of these questions might require me to look at some of your situations more specifically, but we don't charge to do that. We're trying to find places where we can help. And if we can help, we make money when you make money. I mean, it's supposed to be win-win. And that's the only way business really ever should be, is win-win. All
thank
right.
you.
Carmen, Sarah Mitchell here. I just would like to say, in my opinion, your sharing tonight has been exceptional and invaluable. So much learning, in my opinion. Thank you for your time.
Thank you. Thank you very much.
Yeah, thank you,
I-
Jeff.
I
I'm
agree.
sorry, go ahead,
Thank you very
Clarence.
much. I was just saying thank you too.
Yeah, thank you, Jeff. I picked out the one I got was that when you host at home, 100% of those meals are deductible. I didn't know that. Thank you. I appreciate that.
Time out. It has to be for a meeting.
Well, yeah.
We can't just have food at home. We got to have a meeting that's going on.
Understood.
So
What time can I come over, Bob?
Yes, everyone's invited over to my house in Lexington. So, but thank you. I appreciate it.
Excuse me, Jeff. Can you put like your email or your information where we can possibly contact you?
Yeah, Bob, can you do that with this? I mean, it was at the very
Yeah.
beginning when you introduced me.
Yeah,
My email address is jharmon@tflworldwide.com. So it's my name, J, and then Harmon, Harmon, at TFL, which stands for Teaching Financial Leadership Worldwide.com. And my cell phone number, I'll say that, it's 803-727-0400. So you can shoot me a text or so forth, and we can start that way, or shoot me an email. And Bob, if you'll post that, that'd be great.
I sure will. Absolutely.
We were honored to be able to help. Like I said, I have a lot of respect for Bob, and I was glad to be on today to help this group
Thank you,
or whatever
Jeff.
get some information. So thanks
This
for
was-
all you do, Bob.
This was an exceptional presentation. Thank you, Jeff. I appreciate your time.
All
Okay,
right.
well, everyone have a great evening and hope to see you next month.
Sounds great. Y'all take
Jeff,
care.
Sarah, I'll talk to you later. Okay, thank you. Bye.